Hey folks, I'm Clayton Collins, CEO at HousingWire and your host for the Powerhouse Podcast. Today we are back with a repeat guest back from the housing news days, Mr. Phil Shoemaker. We've initially had Phil on when he was at Homepoint leading originations, but today Phil serves as CEO of the Loan Store. And in this conversation, we learn about Phil's transition to the Loan Store in 2023, starting with a really small base and essentially building a startup independent mortgage bank focused on the wholesale market. Phil talks about his principles for leadership, the principles of building a business, and a real focus on sustainability of building a wholesale independent mortgage bank that doesn't ride the booms and the bust. Phil is a phenomenal executive that has seen some incredible executive posts from Caliber to Homepoint to the Loan Store, really strong background in technology, which he has shifted to becoming an incredible production and originations leader and now a CEO. I hope you enjoy this conversation with Phil Shoemaker, CEO of the Loan Store. Hey folks, we're here on a snow day in Dallas recording on MLK Day. Guest is Phil Shoemaker. Phil, welcome to Powerhouse.
Hey Clayton, thanks for having me, man. Excited to be here.
Phil, the OGs of housing news know that you are a repeat guest. My first and one of the most memorable episodes of housing news was actually with you in person in our conference room at our old office in Las Colinas when you were still living down here in Texas.
It was right before I moved up to this wonderful snow-ridden place they call Ann Arbor.
And we're recording today when it's snow-ridden here in Dallas.
There you go.
I don't know. Maybe it's bad luck. I don't know. But, all right. So for our audience members who didn't hear that episode 5 years ago, Phil, founding member at Caliber, several executive roles leading production and wholesale, went on to be president of originations at Homepoint and now serves as the CEO of the Loan Store. And Phil, you've seen so many different aspects of the mortgage lending industry. And I was trying to frame up this conversation in prep. And as a compliment, I want to say you're still a very young executive in the mortgage industry for the amount of experience that you have. And I'm so bullish on what you're going to build as we look to the future. But I want to focus on some of the learnings that you've taken to this stage in your career. But the last couple of years have been wild. And as we were prepping for this, you were telling me about the build phase that you're in now at the Loan Store. So tell us about the Loan Store. How did this stage of your career come to be?
Yeah. So, I'll say I'm excited. I think I'm probably one of the few individuals right now in mortgage that can say that. I'm genuinely having a good time. It's I can tell you, it's a hell of a lot more fun building something than tearing it down, and then also being able to kind of put your own stamp on it. And so so Loan Store, just a quick recap on what the Loan Store is. So it was a relatively small wholesale focused lender. I think they're doing 10, 20 million a month. When we joined, the focus of the Loan Store is to really lean in on wholesale. As I'm a diehard wholesale fan. I don't know if that's good or bad, but like it or not, it's what I've chosen. It's I still.
It was your route at Cal. I mean, I know Caliber was diversified, but there was a point where you were leading wholesale, and then at Homepoint, you guys killed the retail business and went all wholesale, right? And so here we are again in a wholesale only focus.
Yeah. And it's not, I've kind of learned to talk about this differently. It's not it's not like one channel is better than another. It's really more in my I'll say current view about being able to focus and be really, really good at something. I do have my opinions as to, wholesale being better for consumers, because I do think there's more alignment with the originator, right, than there is in the retail setting, but not necessarily because retail's bad. It's just choice. And so we're wholesale focused. I'm still carrying that forward here. And I think the probably the best part about the Loan Store is one, the team that we've been able to assemble is just really, really good, and in all aspects of the word good. And that it's not only people that really understand mortgage. They're people that share my same I'll say bias towards wholesale. But they're just genuinely just good people that have the right intentions. And so the focus is is very much on that. It's on culture, it's getting the right people together. And unlike, I'll say, in some of my prior experience, I have this new belief, right or wrong. It's funny how like your view on the world just changes with every experience you have, but it's neither good or bad. You just get a little better, right? You learn something, and from that you start to take a different view. And my current view is that, if you look at the way this industry is wired, the I'll say influence that the government has on it, the agencies, the regulatory complexity, it just doesn't change that quickly. And it definitely, and I think this about me, Clayton. I come from a technology background, so it's a little weird for me to say what I'm about to say, but like, I spent years like trying to automate people away and like figure out more efficient ways to do mortgage. And what I strongly believe now is that it's while efficiency matters and cost structure definitely matters, the most important thing is just making loans, being really good at making loans, doing them with high quality, doing them with a customer service first mentality. And I think, because I've been in scenarios where it's like you're trying to balance building a business and the I'll say the human nature aspect of mortgage, where you're dealing with all these complexities, right? Real estate agents, LOs, and there's so much emotion, and customer service and being able to deliver when people's paychecks are on the line is very, very important, but having to balance that with efficiency and trying to do things cheaper, better, faster. And oftentimes where that leads you is down a path thinking that there's some sort of like, silver bullet technology solution out there. And I just don't think there is. I think it's a commoditized industry that we are operating in. We're all competing against, selling a commodity. And I'm probably not going to be popular in saying this, but I don't think there's any advantage to technology. There's a bar for sure, right? It's kind of table stakes, or there's a barrier to, cost of entry. Like there's a level you have to hit, but trying to differentiate yourself through tech at the expense of losing that customer service, communication, speed, focus, in terms of just the complexity, and being able to resolve all the insanity that comes up in a mortgage loan. I don't think there's anything out there that makes sense. And so our focus is, hey, look, we're going to be where we need to be on tech. We've partnered with some really good partners that have agreed to support us in building a platform that will be competitive in wholesale. But I'm no longer trying to create any sort of technology advantage. I just want to be really good at making loans, and I don't have to, strive towards any sort of volume goal or anything. I just need to be profitable and around for the long term, which is, it's kind of a fun place to be. It's like it gives you a little more, I think, flexibility to do things the right way.
Well, let's talk about like technology strategy at different scales. So like your prior organizations, I mean, I don't remember how big was how many, like from a headcount perspective, how many people were at Caliber at like peak level? Like
it was
right?
pretty big. Yeah. It's probably 4, 5, 6,000. It's a little different, right? Because there's a lot of distributed retail there. But yeah, both Caliber and Homepoint, they're fairly large companies,
So when you think about like, does your view as an executive, and you're thinking about like, all right, how do I make technology improvements that like move the needle when you're at a scale where you have 5,000 employees and X billion in origination volume? Do you take a different mindset on technology?
Absolutely.
And then compare that to where you are today with TLS. TLS.
So it's all right. People do it all the time, by the way. I think there definitely is a mindset shift. Look, when you're smaller and you can be more nimble, you have the ability to do things differently, right? The larger you get, the more bureaucratic things become, the less forgiving things are, the more rigid you become because the structure almost mandates it. But I think, and this is just more me saying, like my personal belief, like I used to constantly drive towards some sort of like technology value prop, right? Where it's like you can throw some tech out there that somehow differentiates you from the competition. And while not to say there's not things that people do different technically that give them a great marketing talking point, I guess the point I'm trying to make is that big or small, I personally believe that the most important thing is you got to just be really good at making loans. And especially if you want to be a purchase centric lender, which is really what we're building TLS around, is like, we want to be able to handle the complexity and all the nuance that comes up with speed and with the right level of service. And it's very hard to automate that. It's all in I mean, I've tried multiple times and I've failed miserably, almost at a pretty healthy hit to the business, because the more you start to lean in on efficiency and doing things in a streamlined way, here's the thing, that requires consistency, right? And so the more consistency you build into your process and do things through tech, the more it takes you away from your ability to be dynamic in how you support the consumers and our brokers, right? In these very, very complex transactions, especially in the purchase market. And until there's some sort of fundamental shift in how our industry works, because all of this comes down to, you have Fannie and Freddie, on the back end that set the rules, and you have these massive, amounts of regulation, both at the state and federal level that you have to constantly comply with. And the reality is, look, it's funny. I'll go back. I remember, one of the first things that I did in my career was to build an online locking system and build an online 1003, right? Where it was awesome, right? We thought we had like come up with something really, in fact, it's funny, a friend of mine, Lyra Wagner, I think, she's the CIO of Movement. Yeah. She sent out this flyer the other day. It was this old like marketing pitch of the company we were at. It's just like, it's funny to look back at like some of the things that we thought were cool, because now they're just like table stakes. I mean, like, people got excited, companies like Blend, and like, oh, there's, all this like streamlined application that will somehow make it better for consumers to take an app. And at the end of the day, it's just a freaking 1003, and it hasn't really changed. And I'm going on year 28. In 28 years of this, is like the way you take an application, the automation around that, hasn't really changed. And so I think, look, more power to people that think they can change the industry with tech. Like my focus is going to be on handling complexity, and if that leads me to TLS is a top 10 lender, a top 3, I could really care less, man. I want to be really good at making mortgages. I want to be able to navigate these cycles in a more sane way. I'm tired of the boom and bust stuff, and run a company with a long-term mindset. That's my goal.
It kind of feels like a few cycles in, and the only thing that moves this industry really quickly is a change in interest rates.
Yes.
The technology might be what gets the buzz, but it's rates that can actually change things on a dime.
That's right, man. It honestly, it really is. And when you have this kind of messed up dynamic too, where, and this is also why I think you don't see really ever any innovation take hold and have longevity unless it's driven by the agencies. If you look at the only innovation that we've ever really see take hold, like things like day one certainty, is because the Fannie Freddie behind it, right? But outside of that, the problem you have is look, I feel bad being a vendor in this industry must be horrible, right? Because you're in time, and that's why if you look at the vendors out there that are successful, it's because they've just aggregated a whole bunch of scale, right? So starting out is very risky as a tech vendor in mortgage, but the issue that you have is when the refis are here and times are good and you got thick margins and everyone's willing to spend money, you're also too distracted by just the onslaught of loans that you're getting. So it becomes very hard, right, as a lender to really devote the focus and energy you should be devoting. And then when the refis go away and the purchases are here, you don't have any money. So you never really like build any serious momentum around technology because of the cycles.
No, I mean, rewind spring 22, like we had some very real conversations with some of the tech and software players out there that, hey, like our lead gen funnels are working great, but none of these lenders have time to actually implement or sign a contract. So like, man, I really hope the market slows down a little bit so some of the lenders will actually have bandwidth to like do some of this innovation they've been planning toward. Whoop. Like that didn't really work out the way everybody planned.
No. So I don't know if it's just old age. Like I'm becoming my grandpa that shakes his fist at the young kids, but it's like, man, I'm all about focus these days, man. That's the thing. And it's like, and I think that and again, if you think about like the problem is you start going down this path where, going back to that lenders and how they invest in the cycle they invest, if you're not really all the way in and you invest in things and you don't get the return you're expecting, now you have a cost issue, right? And so, which comes back to kind of our strategy here. I mean, I really, while I agree that we need to be at par for the technology standpoint, I'm not investing anything above and beyond that, because that's, I think, what I've learned is the cost structure is it's just so incredibly important. And if you don't, someone one of my mentors, and I kick myself because I should have learned this lesson, Clayton, like 10 years ago. But I remember he said, his name was Joe Anderson. He was one of the CEOs of Caliber. And he used to say, the time to watch expenses is when times are good. Right. And I didn't fully appreciate that until this last cycle, because the problem is when you're building a company and your margins are really thick, right? If you're not building it the inflexibility that just overall people have to think about things differently it's very hard to change mindset, and so you really need to kind of instill that and keep that discipline regardless of the cycle, because you just can't change it. And this is if I look around, every mortgage bank right now is having this issue, right? If you go back to 2020, in 2021, a lot of people that thought they were like special. And granted, some people are special, but I would say, and I'll put myself in this category, most people are not, right? The market does not make you, brilliant, right? It's the market. And so I think too many people in this industry don't admit that and don't, I'll say manage with that mindset. And I'm definitely one of them, man. It's like, I've gone through this now a few times, and I'm hoping that's the last time I've had to learn that lesson this cycle.
We'll double click on that lesson a little bit more. But, all right. So Phil, to set the stage. So it was last year when you came into TLS, correct?
Yes.
So I was checking out the business and Modex, and like, as you came in, it was like 20 million in origination volumes. You're starting from like a really small platform. So like,
yes.
Tell us about this transition into essentially being like a startup IMB executive. Like,
yes.
like how did that day one look? And then like, what have you had to like knock down to start like building this business to where you want to be?
Yeah. Oh man. Okay. We can talk about this for hours, man. So one, I've done this startup thing now a few times, and this is probably taking me back to my roots, because this is probably the most startup I've had to operate in a while, right? Since maybe the early days of Caliber. But you really appreciate the complexity of what you're doing, because you can't have, what I fully appreciate now, and I love, part of why I'm having so much fun is there's not really any area of our business that I'm not like extremely involved in, right? At a very low level, and I have the ability to do that because we're only doing a couple $100 million a month. And so it's a little easier to get your hands dirty when you're at that level. But what I've learned is you can't, well, one, it really is about alignment. And so I spend a lot of my time, I don't want to say like being the, psychologist of the company, but just helping people to understand the goals and making sure that everyone is really moving towards the same goal, because it's very easy, even when you're small, to become misaligned on what you're trying to do. And especially, it's more important. I think it's important, I guess, at any size, but it's critically important for me because, we have every ounce of energy we put into something has to translate to value, right? Because when you're a startup and you're operating in that mindset, to have any sort of risk of like spinning your wheels on something that doesn't actually translate into value add to the company is a dangerous thing. And so I've really enjoyed, to get back to your question, being this hands-on. And I think that probably one of the lessons I've learned, in the last, I'll say 10, 15 years is you can't ever let yourself not be this. Like I'm convinced of that. I think it's so we have these principles that we rolled out. This is actually something I learned, I really took away from Willie, Homepoint. He was very big on this, on alignment and getting people on the same page and principles. And I used to think it was kind of like, whatever, I kind of laugh at it a little bit, like this is fluffy stuff that really doesn't add value, but it does. It adds so much value. And so being able to, as a leader, to be able to kind of set that stage and create the alignment, I'm finding that that's one of the most, effective things of my role, right? Is if I get people aligned, the speed at which you're able to execute and move and the things you can do, so to go back to your point, when we joined, we were doing 20 million a month or so, just conventional. I mean, and now we've rolled out all the government, products. We rolled out a whole suite of non-agency products. We rolled out HELOC. We've, completely retooled our front end, back end process. We're almost done. By the probably middle of this month, we'll have like self-serve disclosures done and like some of the tech that was missing. And I'm doing this all with a very small tech team and a lot of really hands-on managers that are able to short circuit, the time and the bureaucracy that you normally see from someone that understands the problem to communicating that to someone, that ultimately has to build a solution, and so it's, I'll be honest, I've been like in this phase before, and then I've been in like the transition phase where you're becoming a big company, and I've been in the big company phase. And so I've there's parts that I've enjoyed about each of those phases, but I think the startup phase, what I'm hoping I can accomplish, Clayton, is I never want to leave this phase. Like I always want to operate with this startup mindset because damn, you move quick and it's so much fun.
So what are the core principles that you're instilling today that help you maintain some of this startup DNA as the organization scales?
I love it. So here's what we're going to do. I'm going to pull up my deck. And
okay.
If you'll indulge me, I'll give you some of them. All right. So number one, okay, we operate sustainably. Profitability and quality are always our top priority. And here's kind of what I mean on that. That's really thinking about things from a long-term perspective. There's sub bullets that I could go into. It'd take too much time, but really making sure that all the decisions that you're making, you're thinking about the downstream and future consequences of what they mean to you in this market and the next one, right? And that's the piece. It's easy for me to say this, but it's very, very hard to execute and implement in practice. And I think a lot of people would probably agree with that statement.
So sustainable lending operations, I mean, that flows a lot into pricing. Like you're not willing to buy market share by being too low today, but like you're also thinking about how pricing impacts like the value of your servicing rights and like other like downstream implications. Like
that's right. It's just like you gotta. Well, I guess the way kind of we think about it is we have a very specific look. If you look at wholesale, like while I believe wholesale is the best channel for the consumer, and as we've established, in prior conversations, it's where I'm focused. I'm a big fan of it. It's also like, I mean, it's a bitch to compete in wholesale. It's it's one of the most
competitive market. It's one where brokers come and go. Like,
yeah, man, it is so freaking cutthroat. And you got the main incumbents, I mean, they're playing to win. And I've been competing against these guys and gals for a while. And look, you got to give it to the top guys right now. I mean, They got there for a reason. Right. And I think they probably understand a lot of the principles. I'm probably late to the party on some of this stuff, but yeah, I think if you look at wholesale specifically, what I don't want to do is I really am tired of the boom and bust thing. And part of being able to navigate that, growth is important in mortgage, just in general. Like the more scale you get, the more power you have, right? It does give you leverage, but you also need to be very mindful. I guess what I'm trying to say is I am less focused now on growing, even though before I used to believe that growth would give you some sort of sustainability. And I'm more focused. Like I would rather do a lot less volume, but do it in a way that positions me where I don't have to ride these cycles as extreme, right? Because it's very damaging culture wise to build your company up. And then the refis go away and you have to fire a bunch of people. That's a model that a lot of people execute, and it's effective and it will continue to be effective. But I also don't think it's sustainable from a culture standpoint. You know what I mean? Number two, right? We serve our customers. The answer is always yes and never no. And so what I mean on that is it always drives me nuts when people just say, no, we can't do that. Right. It doesn't mean you say yes to stupid things. It means you can always say no by saying yes, or you could say, yes, we can do it. And here's what we need from you to do this. Right. And if a condition can't be met or something, then great. But having that mindset where you're actually trying to make things happen versus always going, and that is a mindset that a lot of companies fall into, where they get this negative mindset and it's just immediately, there's no creativity anymore when you approach it from the negative, right? If you're approaching it from the positive, you keep that creativity in play. Principle 3, everyone is accountable. When you see a problem, take ownership of a solution, regardless of it being your problem. I hate it when someone says, oh, that's this person's deal over here, I'm going to send it there. And then 2 weeks later, I get an email that says it's still not taken care of. And then this person's saying, well, I sent it over here. It's like, no, it's like you see a problem, fix it. And that very much is a mindset, cultural thing that starts with the CEO is what Willie was good at that. I'm trying to carry that through. But I will say that one of the things I really enjoy about TLS is I've yet to find someone that's not willing to pick up. I mean, it was hilarious when we joined. I remember our CFO, right? He was like staying up, because we onboarded like 100 people, in like a month. And he was staying up till like 4 or 5, 6 o'clock in the morning, like setting up logins and stuff. It's like, that's awesome. You know what I mean? It's like roll up your sleeves, toilet paper in the bathroom needs changing, I'll do it. Like that's kind of the mindset there. And that's actually kind of that leads in the fourth principle. We're all doers, right? And so I think that part of what happens when you grow as a company is it's really easy to become infected with people that view their job, their role as telling other people what to do. And once you get there, it becomes very hard to move quickly because now you have the telephone game in play. You have this mindset where people don't like, they start seeing their own value is how many people they manage, and they stop becoming a productive member of the team. And I don't think actually that's good in any company. I think my nature is I am biased towards action almost to a level that maybe is not healthy. So I'm learning to channel that into an organizational structure that can move quickly, but also do so in a very methodical, thoughtful way. That's number 4. Number 5, teamwork and alignment first. So we win as a team, not as individuals. So I've again seen too many instances where it's not a competition, man. It's not about like one person getting something over another it's like, especially in mortgage, you either win as a group or you don't. Like there is no like one group wins, and so alignment's really important. Next one, we are nimble, right? So moving quickly, right? And this is what'll happen is people get so stuck in what they know, they stop thinking about the what's possible, right? And so constantly thinking about, all right, just because you're in your comfort zone, right, doesn't mean things can't be done different. And what I've learned actually, it's really important for me to give people grace on this, because what'll happen is it's okay. Like if you're too punitive on people, like they got to be perfect, and if they make a mistake, you're too harsh on them, you start to lose that ability to be nimble, because people go into CYA mode, right? So they're more concerned about the optics of not making a mistake than they are about the optics of speed. And so part of this is like, our mantra is like, hey, make mistakes, learn the lesson, and just don't make the mistake again, and we celebrate that in kind of an odd way. When people make a mistake and learn from it, that's how you stay nimble. And that's how we've moved as quickly as we're moving. I mean, it's really incredible to see. And then the last thing is we have fun. It's like I'm kind of done with this. Life's too short, man. I don't know. So my kids are getting older. They're almost. My son's about to go to college. My daughter doesn't like me anymore. Like she's in that teen phase, and like I've come to realize like there's just so many sleepless nights I spent like worrying about useless things that never were something I should have worried about. And so just keeping people kind of grounded and like, hey, like, don't take yourself too seriously, have fun at what you do. And you actually can control that. Like, that's the other thing too, is this is a personal accountability thing. Like my emotional well-being or anyone's emotional well-being on a team is your own personal responsibility. And if you're not having fun, the onus is on you to raise your hand and figure that out.
So right now you're in a pretty like talent rich market in mortgage. There's a lot of people out there available.
Yeah.
As you bring new people into the organization who may have come out of organizations that had a CYA mentality, the mindset wasn't right. They just went through a massive headcount reduction. Like, how do you bring people in, reinforce the principles, make sure they're having fun and that the culture doesn't get diluted as you start to scale volume?
Excellent question. This is something too that I've really debated with Willie. Willie Newman, by the way, was on our board now, and so he's what I found is it's really lonely being the CEO, and it's good to have people you can.
That's why I host the Powerhouse podcast.
It's like
CEOs.
It really is, man. It's like I find myself like, man, like and even like because I was, I spent a lot of time with Willie at Homepoint. I don't think I fully appreciated what you almost have to be in the seat before you can appreciate the stresses and how isolating it is. But to go back to your question, well, one, you do kind of need to make it fun. So we have this thing that I call the zero asshole factor, and so I try to, in a way that is pretty black and white around the type of people we want to hire, but also is kind of fun. We talk about that a lot on town halls and things like that. When we get, I think getting multiple perspective on people is important, and trying to hire people that are maybe known entities. And I guess what I'm trying to say is I at my scale and how fast, it's kind of a function of speed and how fast you go. Right. And so the problem is if you move quickly and you're growing quickly, it's very easy to lose control over that. And you start to, because you have to, I mean, you're delegating these authorities, the decisions to hire down. And I think
it kind of counteracts with like the bias to action thing. Like you want to,
yes.
When the opportunity's there, when the market's knocking, you want to grab and you want to be taking action, but at the same time, it's difficult to be thoughtful and come back to the principles and reinforce the things that got you to that, like, that inflection point where you actually can like have a bias to action and grow.
You're exactly. And this is tough for me because I at times, look back at Homepoint, look back at Caliber, where we grew extremely fast and it made sense, right? Financially, it was the right thing to do. But in hindsight, there is no way to do that and protect your culture is kind of where I've kind of come to realize. It's like, I would rather grow. I would rather forego some of the opportunity in a market and grow in a way that allows you to protect, because it really is about the people, dude. Like it's like mortgage banking is about the people and alignment. And if you look at the really good, I'll say, main incumbents out there, I do think that's part of what they figured out. A little different than the model I'm trying to execute, but like if you create alignment with the people and you either do that because you have a lot of structure and process and you can take any type of person in and you can make them work in your environment, great. That works, right? Or you need to be able to do it just very methodically and be very selective on who you bring in. And so the model I'm executing is I want it to be about people, and it's very important that we have the right type of person with the right attitude, which means you kind of can't miss on the stuff. Like you got to be a little slower to grow.
Let's talk about the wholesale market for a minute. So you're serving brokers. The wholesale market has had a lot of growth the last few years. I think as more volume has shifted to purchase, there's been more people entering the broker channel. There seems to be some market share growth in comparison to retail. What are you seeing in the wholesale market? How do you want TLS to fit into that pie of the wholesale pie? Like give us a view there.
Yeah. So I believe the wholesale market will continue to grow. And I think think the reason for that is I think it is finally starting to, if you go back like 5-10 years ago, somewhere post the financial crisis, there developed this narrative, and quite honestly, I used to be part of it when we were building retail, where a lot of the retail players would really sell against that model.
Yep.
And the way they'd sell against it was you lose control, you lose support, you lose all these things that really scare the hell out of originators. And I think what you're finding now is just because even though the pool of lenders has shrank in wholesale, if you look at the main incumbents and you look at the lenders around that, it's actually a really good model to support originators. You have diversity in product. You have systems that have been put in place that allow a more responsive, communication. Where like for example, what we're building, our goal is we want to be good at we never want to miss a purchase, right? And so if you're having an issue, our underwriters are very open and communicative. There's these things that that lenders have figured out that I think have totally, taken that argument out of play. And then add into that, I think that, so one of the things we're working on to this a little early stage, I haven't really talked about in a public forum, but I do want to help make brokers. And so we're creating a model where we can incubate brokers, and and it's not because I want all their volume. In fact, it's the opposite. I think that part of what makes them successful is diversity. But I do think rising tide raises all ships. And so the bigger, I'll say all wholesale lenders can do to, collectively work together to bring more people into the channel, the more successful wholesale will be. And I think that also includes, I think there should be more wholesale lenders, and so I think that you have seen some contraction that I think is not good. And I think you see startups, TLS being one of them. I'm rooting for them. I mean, it's like, we need more wholesale lenders, not less.
When you talk about creating more brokers, you think talking about bringing people into the industry or the retail to wholesale switch over? Like, how are you thinking of that strategy?
Yeah, it's bringing people into the industry, and so we're working on creating a services entity that would help bridge the gap. Because a lot of what happens when people, and it happens at all levels. It can be an individual LO, it could be a group, a branch, it could be a region, right? I mean, it's like I'm personally working on a few fairly large scale migrations from retail to wholesale right now. And the thing that's typically scary is think about it, like a lot of these are production centric people that have never had to worry about payroll or benefits or, accounting or any of the stuff that's really not that sexy or fun about mortgage. Right? They've never had to worry about that. And so that's usually the barrier to entry. And what you're seeing is there's a lot of a lot of the migration has come from is you do have certain, there's a smaller population of people that have come in or are coming in that have that level of sophistication. But then you have this larger population that is either an impediment, or what they're doing is they'll join one of the super brokers, right? Because you do have a lot of these large broker networks. They almost operate like a traditional real estate brokerage, right? Where it's like a real estate agent or an LO, right, can come in and hang their license and start doing business. And so I think I'll say the reintroduction, because this used to be a concept that existed, a while ago, but of the super broker that makes it easier for LOs to make that move has helped. Our goal is to be something in between, where for the individual or the group of people that want to make the move, they're not interested in being part of they want their own brand, but they also don't have that sophistication. That's kind of the strategy. And I may or may not know this, but I know other lenders are working on this. Like it's a good thing for the industry. The more brokers we can bring into it, and you should have Katie Sweeney on. I know you talk to her quite often, but she's got some great data and analytics around wholesale and the benefits of wholesale to minorities and underserved communities and low income housing and things like that. I mean, the stats, if you go back to 2015, the stats on wholesale from a credit quality standpoint, from the penetration in underserved communities. It's just, it's eye-opening, you know, and I don't think this is really well understood. And I think that this is something that really still to this day bothers me. I've given up on it because I just realized it can't be my fight, but I'm going to support her and other people. But this whole concept of the capital rule and you know, putting wholesale at advantage because it somehow is more risky is something that does need to change eventually. I think the regulators and the FHF and FAN, they'll figure it out, but it's just like, it is a little frustrating that like there's this channel that is growing that is so much better. That just objectively, you can see in the data at accessing some of the things that they find important, i.e. low income housing, and yet they're penalizing it, you know, financially. You know, it to me, it doesn't make any sense. But I think, you know, at some point someone's going to figure it out. You got to report on it more, Clayton. Report on that more. It's a big deal.
Well, that's a great suggestion, and we will have Katie on. Well, Phil, that is a wrap for today. Thank you so much for coming on, sharing more about your story, and giving us a glimpse into this exciting path that you are building for the Loan Store.
Yeah, man, my pleasure. Always enjoy it.